Hi guys, welcome to Practical Trader. Now with a vague picture on stock market basics, let's start initially with a single script that you can invest which has low risk and can return gains equal market gains. Indian equity markets has given an average annual growth of about 17% over the long term. Imagine a stock which will give you 17% annual return if invested over 30 years. If you don't want to understand anything and don't want to think about your equity investment, just remember this one sentence. It works for 95% of people. That's it. Simple, right? For example, if you have a surplus of rupees 10,000 every month that you want to invest in equities, close your eyes and buy Nifty Bees for the 10,000 rupees. Investing every month, you would have a few hundred shares of it in a few years, which would continue to grow as long as you stay invested. Nippon India distributes the fund similar to Nifty, and thus the movement of Nifty Bees will be similar to Nifty Index. Now you would have thought this guy is telling about some bees in past few videos. What really is it? So what is Nifty Bees? Nifty Bees is an exchange traded fund managed by Nippon India, which tracks the Nifty Index. To explain in simpler terms, Nippon India distributes the fund similar to Nifty Index segmentation, and thus the movement of Nifty Bees would be similar to Nifty Index. Now a question may pop in your mind, why not buy specific company stocks? You might be very interested in investing in specific company stocks because that's what everyone does, and the people on TV are so experienced and say they have 100% strike rate in picking winning stocks. Do they really? No. This is a common problem when it involves finances, matter just like astrology. They don't talk about predictions that fail. Instead, they make you focus on how their choices of one particular stock earned them 60% return. They don't talk about the 10 other stocks which made investors lose more money than they earned in that one winning stock. People are easily affected by confirmation bias, and it greatly affects their investment. That said, it doesn't mean you cannot get hefty returns if invested in specific company stocks, but it takes a lot more of your time, knowledge, increased factor of risk, and an ocean of factors that you are not going to crack it down exactly. But suppose if you are facilitating yourself to a position, you may get 2 or 3 stocks of 10, your desire may become reality. Remember, no one can select winning stocks every time, and you won't know in advance which prediction would work out and which wouldn't. So ultimately, it depends on you how you want to go, factoring your success rate with the skills in hand. Other consideration which people may follow is mutual fund. Start an SIP, sit back and relax. But again, mutual funds are managed by humans who check the fundamentals of a company and try to guess when to invest in a company and when to exit it. But like I said, they are no better than financial experts you see on TV. Add a small fee that you need to pay the fund manager to handle your money, called expense ratio. You would end up losing money before making a bit of profit. All this for just some mediocre stocks picked by some human. So what's so special about this Nifty Bees? Actually, Nifty Bees is an index fund. The value of investment would increase if Nifty increases and it would fall if Nifty decreases. The value of Nifty is closely tied to how Indian economy performs. If all the industries are doing well, Nifty would definitely increase. Whenever a company underperforms, it is removed from the index and a new company is added to the index. The ETF automatically makes the adjustment in the investment. It is exactly as if you are investing in 50 frontline companies. When invested in long term, you would definitely have increased your investment multiple times. And the interesting fact is that this time the government will help you to retain your money. Whatever happens, the government and industrialists will make sure Nifty grows for establishing a prospering nation. If you observe the crash of 2008, the Nifty index corrected and hit an all-time high in a period of just 2 years. Now, since we have seen the upsides, now considering the risks involved, it is definitely less risky than buying a separate company's stocks, because you are investing in 50 stocks spread over about 22 sectors. How much more diversification do you need? Even if one particular stock is not performing well, say metals or manufacturing, there would be other sectors which would perform well, like IT industries. Your investment would grow even if a few sectors underperform. In case of a total bear market, your investment wouldn't fall as badly as investing in a few companies. Now, if you think, why not buy the 50 companies individually? You can always buy the 50 companies of Nifty index individually and get the same effect. But the advantage of buying Nifty Bs instead is you can invest a very small amount every month and it will grow at the same rate as Nifty. To buy even a single share of Nifty companies, you would be needing a much higher investment. And manage the weightage of different companies and reshuffling the portfolio whenever a company is taken out of the index and new one is inserted would be a headache. Which is easier, tracking 50 companies in your portfolio daily or tracking a single ETF once a month just for 5 minutes to see how much you earned? Now, how do we buy it? Buying Nifty Bs is very similar to buying a company's stock. Log into your trading website and search for the script Nifty Bs and buy the required quantity. I'll show you how it is done in SIS online. Here I am using the Alpha Traders app. And make sure you don't invest all the amount you have in hand at once. Buy some quantity every month in dip prices, or like SIP, buy at regular intervals, so you can average out the prices. When you retire 30 years later, you will be sitting on a nice fat load of profit and any of your friends. Just trust me on this and invest in Nifty Bs regularly. This is more than enough for 95% of a common man's investment needs. Especially for beginners, start with Nifty Bs for 3 years and see the difference it makes versus your friends who invested in some new companies. Thank you and happy investing.